And now for something completely different.
It's a rich man's world.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
Edition of the Real Investment Show this morning. I'm your host, Lance Roberts. Of course, as we're getting this day off. Hey, Brent, do you remember back in the day? I don't think they don't. When I went to my son's varsity football game, just recently, they have all the cheerleaders and the bands, playing and everything, right?
Yeah.
But you remember back when we were going to high school, they used to have that who's got spirit, who's got more spirit, and they would go back and forth across
the stadium,
right? Who's got more spirit, me or you? Mm-hmm. Well, this is what's now happening with the vaccine drugs. Yeah.
Who's got more efficacy?
Exactly.
Me or you?
Exactly. Pfizer came out last Monday. We talked about this, right? They said, hey, our drug has 90% efficacy to this, right?
Yeah,
it was 90% effective. And everybody's like, yay, we ran the markets up. Well, then Monday, this past Monday, Moderna comes out and says, ours is 94.5% effective.
Right.
Yeah, well, that couldn't be left alone. Pfizer this morning coming out, well, ours is actually 95% effective. Take that.
And so it continues.
Yes. So tomorrow we'll have 95.4% effectiveness from somebody else. So there you go. Anyway.
And the thing they're not saying, we talked about this just before we went on.
Yeah.
You got to have a booster for that thing. It's not just one shot.
No. Moderna is a 2-shot program, right? I don't like needles to start with, so I can tell you I'm going to be 2 shots short of a vaccine.
You go first.
Exactly. They also have come out now. They are approving a at-home COVID test.
Oh, fun.
Yes. So,
just in time for Christmas.
Exactly. Now, you can, just in time for Christmas, you too can sit at home and do your own COVID test. So you have to take the rod. You've got to swab, cram it up into your nose and swab it to test it. But yes, you can test it. I just have a question. How many people are really going to do that? I mean, it's going to be like, nope, I'm COVID free. My test says no COVID.
Can't wait.
I want to know, and I want to know how many people wind up in the hospital with like a brain hemorrhage. So that'll be the other thing. All right, look, we got stuff to get into this morning. Irrational exuberance is coming back to the markets. We talked about this on Monday. As we kind of talked about the reason we were raising cash in our portfolios and reducing our exposure temporarily. And the reason is because when you take a look at the markets from a standpoint of technicals and sentiment, et cetera, all beginning to reach very, very extended levels in the markets that have historically kind of equated to short-term tops in the markets. That doesn't mean a bear market. That's not what I'm saying at all. These were the same type of discussions we had back in February of this year, in September and October. Unusual that we have this type of swing in emotions all in one year, but that's the type of year we've had so far. But in both February and September and October, we talked about needing to remove money from the markets because of this irrational extreme, which led to short-term corrections, 35% in March and to 10% corrections in September and October. Well, we're now back to that, and that's what we talked about on Monday. Got a few additional things today for you. If you read our article on Tuesday, which is on our website, technically speaking, the bulls are back. That's on the website now. All the charts are there. A few other charts just to go along with that as we talk about this. The number of stocks currently trading above their 200-day moving average is now at the highest level that we've seen since 2014. Now, that sounds good, right? Because that's breadth. We've got a lot of stocks trading above their 200-day moving average. A lot of stocks are participating in the market. So, if you've been invested, you're making money. It's great. The problem is when you have a very high number of them, and almost 90%, it's like 89.9% of them right now are trading above their 200-day moving average. that's typically where you start to see short-term peaks to markets. And in fact, if we just go back over the last couple of years, we can see that when the number of stocks get very, very high levels, that has normally coincided with a peak in the market. It's been a good opportunity to just take a little profit and look to rebalance your portfolio on a correction. Generally, these corrections last somewhere between 5 and 10%. And this is particularly the case when you have a very high level of participation and when the markets are trading at 3 standard deviations above their moving average, which is the case now. That deviation doesn't occur very often. In fact, the last time that occurred was in basically September of this year before that 10% correction, and then, of course, in February of this year before the 35% correction. Outside of that, it didn't happen until January of 2018 when we had the 20% correction in February. So again, it's worth paying attention to deviations as well as participation, because they do tell you when basically everybody's gotten too far in to the trade overall. Also, too, value is outperforming growth. Hearing a lot about this in the media right now. It's like, oh, value's finally back. Value's not back. It's just back temporarily. The last time that value outperformed the growth by this magnitude was in both 2008 and 1999. Hate to tell you what happened next, but that's a function of basically markets getting overly exuberant. Now we've made a lot of money in all the trades that have worked over the last several years, so let's go buy the stuff that's not been working, and we run that up, and it's typically a very late stage cyclical advance for markets, so pay attention to that. Also, it kind of shows the same thing here. Just in the last week, fund managers globally shifted into small cap, emerging markets, value over growth. That's been the shift here over the course of just the last week in positioning. And as you see here, the belief that small caps will outperform large caps is now at a record level by fund managers internationally. Before you jump on that trade, though, might be worth remembering that going back for 15 years, the S&P has outperformed by a handy margin small caps, international, and emerging markets. So again, it's always important about where you put your money, what companies can grow earnings, and what countries can actually generate economic growth, etc. That's been a reflection here. And in fact, investing in small cap over the last 15 years really hasn't given you much of an advantage at all, even when they were basically tracking neck and neck over the last decade before the separation began in 2018. Outside of that, the other problem with small caps in particular is that small caps and mid caps are exactly where most of your zombies live. Yes, zombies are alive in the U.S., and these are companies that require debt to stay into business. And currently, the number of zombies require about $1.4 trillion worth of debt just to stay in business. So 2 things here that are important. One, a lot of these zombie companies exist in the small and mid-cap space, so be careful what you own. Know what you own. That's always very important when investing. Know what you own. The other side of this, though, is that, again, if interest rates go up at all, a lot of companies go out of business when they can't refinance their debt. Valuations, obviously, back to all-time highs. In fact, based on the Husband measure of margin value adjusted PEs, we are at the highest level ever in history. And lastly, sentiment here. Again, smart money has, we talked about this on Tuesday, the smart money has left town. While retail money, what we call dumb money, is jumping into markets, smart money's been selling. In fact, smart money's now pretty much at one of the lowest levels we've seen here. Typically, that coincides with market peaks in the near term. So again, these are just type of the things to pay a look at. You know, when you take a look at optimism, it's also at a level normally associated with peaks in the markets. Again, it's just a function as if you're investing money, pay attention to what's going on here. We've had a lot of exuberance in the market since the election. We're very well ahead of the game. The economy is starting to slow down and stall on different measures. We're watching that. We don't have a solution, and we don't have a vaccine. Vaccine won't come until late next year. So, again, just pay attention to where your money's going, what's going on. But we'll come back after the break. Lots of stuff to get into this morning. I'm your host, Lance Roberts. Don't go away. RealInvestmentAdvice.com is the website. Be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Long-term care is the financial elephant in the room. The median national cost of a private room in a nursing home? $8,517 a month. Are your finances prepared to handle that burden? Our next Candid Coffee with Richard Rosso and Danny Ratliff can show you how to protect your finances from the effects of a long-term care event, the myths to ignore, and how to prepare a plan to address the cost. Register for the special long-term care edition of Candid Coffee, Saturday, December 5th at riaadvisors.com.
You're listening to The Real Investment Show.
Welcome back to the show this morning. I'm your host, Lance Roberts. If I have a two-headed coin and I flipped a coin, I said, Brent, I've got a two-headed coin. I'm telling you up front. I've got a double-headed coin. I'm going to flip this coin. You call the bet. Okay, what are you going to pick?
Well, which head is it?
No, they're both heads. They're both exactly the same.
Heads.
You're going to pick heads, right?
Yes.
Because it's a sure bet, right? Yeah. You're going to win.
You would think.
You would think. Well, the FAA has decided to approve Boeing 737 MAX to fly again.
Really?
Right? So remember, this was the whole big deal that started. You know, we had the crash of the 737 MAX, and they shut down and grounded the airlines.
Software glitch, wasn't it?
The software glitch.
Yeah.
And they grounded the airplanes, and that was a big hit to Boeing. Well, the FAA has said, okay, we're now going to approve the 737 MAX to fly again. Nobody's flying. Heads, you win.
Everybody jump on board.
Heads, you win. Nobody's flying. We can approve the plane's completely safe. Nobody's flying. Nobody's going to crash. So it's good. All right, I'm being a little facetious.
Can't make this up.
Just this much facetious. Speaking of stuff you can't make up.
Yeah.
There was an article out in Investment News, and again, you've always got to be. It's interesting. We've talked about this before on the show. During periods of pandemics or shutdowns or economic stress or recession, these type of things, people start looking for opportunities to get rich quick. Right, and particularly in this type of market, in particular since the financial shutdown, we've talked about all these people on Robinhood, day trading, bankrupt companies, etc. And everybody's making money hand over fist. Easy, right? It's easy to make money. So it's easy to get sucked into situations where people promise you extraordinary returns and they can do all these great things for you. And it's always important to make sure you know who you're dealing with, ultimately, because a California man was part of a $35 million program. He was promising, extraordinary returns and these type of things. And, of course, he wasn't even a registered investment advisor, right? He wasn't even registered, but he just held himself out as a financial advisor. But the thing is that he was actually pretty innovative here because apparently he was wanted by the FBI out in California. California man and the FBI on his part alleged a $35 million Ponzi scheme tried to outrun authorities on Monday by diving underwater using a small submersible device, according to federal regulators.
They'll never find me.
They'll never find me underwater. You have to come up to breathe sooner or later. They'll just wait for you.
That's a pretty snappy little piece that he used, though.
Yeah, it is. You can actually buy one of these online. It's the Yamaha 350 Li underwater sea scooter with a camera mount.
Ooh.
So you can actually film what you're doing underwater.
You can film your escape.
Yeah. Thanks for stealing my punchline.
Oh, I'm just trying to help.
You're really good at that. You steal my punchline a lot. But that's okay. But no, this is just, things where this is not the first time this has happened this year. We've had, there's the SEC's, caught a couple and investigators have caught a couple of different Ponzi schemes this year. The point, though, is And again, this is just the second advisor in just recent months that have been on the lam while under investigation by the government authorities. And during times, like I said, when there's a lot of financial stress, people are looking for an opportunity to make some extra money or make money fast or get rich quick. I mean, man, everybody else is getting rich in the market. Why aren't I? Right? You hear these tales of glory, all over the internet. Be careful with that, because a lot of it's, A, one-off events, and two, a lot of it's not real. A lot of the stuff that you see on Facebook and on Twitter, believe it or not, it's not real. People standing in front of their Lamborghinis because they've been trading day trader stocks, not real. A lot of people tell you, oh, I made, it's always interesting if you ask people, people always tell you about their winners, right? Oh, I made, 50% in this or 100% in that. Richard Russo was on the show the other day, just talking about how he just took some money. He took 10 grand and threw it. I forgot what stock he bought. He was talking about on the show. Do you remember?
It was NIO, I believe.
NIO, that's right. The electric car company. He just threw 10 grand at it. No fundamental research, no matter nothing, right? Just threw money at it because everybody's talking about it. Stock went up like 60%. I threw money and I did kind of the same experiment with him after he did that. I was like, hey, that's a good idea. Let me try this just because I want to write a report about it. So I took a bunch of money and I threw it into Palantir, which is, this software stock that came out. It's up like 60% in a week. So, that's the type of stupidity that's going on in the market. I sold, by the way.
And let me ask for your insight on that. When you set your rule to sell, what was the sell point?
Oh, I didn't have a rule to sell on that one because I didn't know what it was going to do. So I had a stop loss on it. I said, okay, whenever I buy something, I have a stop loss always set. But normally I have an upside target. Say if we get to a certain point. The fact is that, but it went like 50% in like 4 days.
Yeah.
So whatever stop there was, it was gone. But that was the point of the thing, is that I did no research on the company. I followed the same rules as Richard, did no research on the company, did nothing with it, just threw some money at a basically almost just picking letters out of a Scrabble bag. Almost that close. But that's what goes on in the markets, right? And that's not investing, right? That's just pure speculation. That's pure gambling. And I just happened to get lucky. So and so did Richard. But that's what sucks people into these things, right? You hear these stories. Now, what they don't tell you is about all the stuff they lost money on, right? So, you only get half the story. But people hear all these tales of glam and glory. And again, I'm going to write an article on this little experiment I'm running. But you hear these tales of glam and glory, and you see the pictures on Facebook and Instagram and whatever. And most of it is really just for their personal benefit, to sell a product, sell a service, sell a stock. And another thing too is be careful with these stocks that trade sub $5. A lot of these stocks that trade below $5 have very light volume. So here's the scam. I'm a newsletter writer, right? This happens a lot around the country. You'll get these newsletters in the mail. The scam is this: so I find a stock that may be trading at $1 or $2, right? Has no volume in it. So I buy some shares of the company. And then I put out a newsletter that says, hey, this stock's going to go to the moon. And so when you start buying in a liquid stock, the price moves up very quickly. Well, I'm selling my shares in the background, right? This is stuff that goes on all the time in the market. Market manipulation is part of the market, and this is why you've got to be so careful where you invest within the markets. And more importantly, when people tell you they're making extraordinary, outsized returns over time, always start asking questions, because generally you'll wind up with, look. In every business, right? It doesn't matter what business it is, there's crooked people, right? It's just part of the business, especially when there's money involved. And so, this stuff happens. We hear about the big cases, right? We hear about Alan Stanford here in Houston, Texas. We hear about Bernie Madoff, of course, $50 billion. We hear about these really big, Ponzi schemes that work, but there's a lot of these little ones, 10, 20, 30, $50 million that, you don't really hear about. They don't hit the radar that often. They don't make big front page news, but these are very, very common. So, just be careful is my point. Make sure that you do a little background check, on who you're dealing with. Make sure you understand who you're dealing with. Make sure they've been around a while, right? I mean, I've been in this business for 35 years or almost 35 years. Let's not say it. How about 30? Let's just stay there for right now. There was an article out. There was a thing out yesterday talking about lamenting about the fact that because of COVID, we're shutting down bars at 10 o'clock at night, bars and restaurants.
Yeah.
I'm like, that doesn't affect me at all. At my age, I'm in bed by 10. I've already been to the bar. I'm back home. I'm in bed by 10. And apparently, COVID is only active after 10. So
who knew?
Who knew, right? Got to shut down bars and restaurants at 10 because COVID comes out.
And at church.
And at church.
Yeah, they don't want you going to church because of COVID, but man, you can protest out in the streets.
Exactly. COVID doesn't go to church. COVID protest. See?
Just saying.
See, I figured out if COVID doesn't come out till after 10 in bars, it's that girl in the red dress you don't want to bring home to mom.
Or to anything else.
Exactly. Anyway, there you go. Anyway, the point is, though, is just be careful here, particularly when you start getting pitched ideas that seem too good to be true. Generally, when things are too good to be true, they generally are over time. If there's a lot of I get pitched deals all the time where, this is going to give you a 20% rate of return over time or a 25% rate of return over time. It sounds great, but there is risk in any investment that you make that is providing an outsized rate of return, because the reason it's providing an outsized rate of return isn't because they just love you. It is because there's a tremendous amount of risk. And most importantly, if you do private investing, right, make private investments, read the prospectus that you're given. You have to sign off in private investments as an accredited investor. You have to agree that you understand there's a tremendous amount of risk. And buried within those documents are all kinds of statements about the risk of loss. So make sure you understand, again, this is talking about zombie companies earlier in the show. Make sure you know what you own, because that's what comes back to get you. But more importantly, make sure you know who you're investing with. Be right back after the break.
Finding next is black. So if you want me off your back, well, come on and let me know. Should I stay or should I go? Should I stay?
Listen anyplace, anytime at realinvestmentadvice.com.
Long-term care is the financial elephant in the room. The median national cost of a private room in a nursing home? $8,517 a month. Are your finances prepared to handle that burden? Our next Candid Coffee with Richard Rosso and Danny Ratliff can show you how to protect your finances from the effects of a long-term care event, the myths to ignore, and how to prepare a plan to address the cost. Register for the special long-term care edition of Candid Coffee, Saturday, December 5th at riaadvisors.com.
Got questions for Lance later? Ask now at realinvestmentadvice.com.
And welcome back to the show this morning. I'm your host, Lance Roberts. Let me ask you, I was just sitting thinking about this off air a second ago, right? Because we're talking about investing, and this kind of goes along with normally it's financial. We do a little bit of financial planning today. Usually, Danny Ratliff joins me here to talk a little bit about some financial planning issues. But while we were on break, they flashed up some stats on one of our screens here in the studio of how many people have died this year from COVID. Right? We've had like 240,000, 250,000 people. We can pretty much say the year's over, right? I mean, we're halfway through November. We got another month or so ago.
Yeah.
So let's just say that we rack up let's just kind of roll it up for another month. And let's say that we get 300,000 people that died under COVID this year. Terrible. A terrible number, right? I mean, that's just a horrible number of deaths. I'm not saying that at all. But something dawned on me here while we were talking, on the air. We're paying a lot of attention, right now to COVID, right? Got to come up with the vaccine, to cure the virus. And we're spending billions, right? The government is giving these companies billions of dollars to come up with a vaccine to fight COVID. Now, I find this interesting, right? Because we're all at home right now. We're doing all these things because we don't want to get COVID, right? We don't want to get COVID, so we're locking ourselves down. Lena Hidalgo here in Houston, Texas, for instance, she's like telling everybody, you can't go to your friend's house for Thanksgiving. Only immediate family, right? The same thing that Mayor Bloomberg's doing in New York. Lieutenant Governor Dan Patrick was on the radio station yesterday or day before talking about the fact he was being interviewed with Brian Kilmeade and said basically that, Texas has no plans of shutting down again. Good. I mean, this is good, right? Keeps the economy going. But here's my point about all this. 300,000 people died. We're spending billions upon billions of dollars to come up with a vaccine to cure cancer. And we're so focused on this, right? 11 million people, have been infected by COVID, right? And 200,000 people died. If we paid the same amount of attention and money to other diseases, we could do a lot of good for the country. Heart disease last year, in 2020, 655,000 people died of heart disease. 3 times the number of people dying from COVID, right? But we talk a lot about heart disease, but, if you could put down your breakfast sandwich with a sausage, bacon, and extra cheese for a moment and listen to the show, if we...
Just saying.
Cancer, 600,000 people died from cancer last year. Accidents, 167,000. Chronic respiratory disease, 160,000. Look, these are all the diseases that if we spent the same time amount and attention, we're trying to cure COVID, right? Look, I'm not saying that we shouldn't. I'm just saying, why don't we also pay as much attention to these other things that are preventable, right? We could prevent heart disease to a large degree by diet and exercise. You could prevent cancer to a large degree through other methods. If we would focus on some of these other issues, like we're focusing on COVID, then we could also, so Lance, does this have anything to do with financial planning? Hold on. The average American is going to spend $350,000 outside of Medicare on health care and retirement. The average savings, retirement savings for the average American is about $140,000, $150,000. There's a problem, right? There's a big money problem heading into the later years of life because of these issues related to health. Most people are going to spend a lot of their time in and out of healthcare facilities in retirement because of bad health. And it's also going to eat up a lot of people's life savings to care for their health. The Medicare-Medicaid system is part of the $70 trillion unfunded liability as we head into the future. Not enough people paying in for the number of people that are taken out of it. And that's only going to get worse as the baby boomer generation moves along. So my point, though, is that, yeah, we're spending billions and billions of dollars to try to find a vaccine to cure or prevent, I shouldn't say it's not really a cure, it's a preventative for COVID, that's killed 248,000 deaths so far, right? Screen's back up. 300,000 by the end of the year. Terrible number. We could also be applying that same idea, that same money, that same forethought. And if we all came together and said, look, I'm going to eat better, I'm going to exercise. Look, you're voluntarily walking around wearing a mask, you're self-quarantining yourself, you're staying inside, you're not visiting with friends. You're doing all the things to help prevent you from getting COVID. But why won't you do the same things to help you prevent you from getting heart disease, diabetes, these other things. I know it's difficult. It's no fun. But, these are choices we can all make. And financially, it's a smart choice. You want to talk about helping you save money and be better prepared for retirement. It's not just about being financially prepared for retirement. It's also about enjoying your retirement, right? You work all these years to retire. Do you really want to spend the majority of your retirement years in and out of hospitals and on medications and doing all these other things when simply walking 30 minutes a day will fix a lot of your problems and eating a healthier diet? And again, we talked about before on the show, our good friend Keith Klein has a very simple motto: make better bad choices. When you talk about diet and exercise as a function, people go, I don't want to exercise. See, this has been my whole point about working out. When you tell people working out, it sounds like work. You got to call it something else, like, go have fun.
Intense fun.
Intense fun, right? Yeah. Call it sex. People will do that, right?
Sex prep.
There you go. People will do that. But work is it? But if you call it working out, it just sounds like work. I don't want to work. I've been working all day, right?
It's a unique kind of foreplay.
Yeah, exactly. But the point here is that if you make better bad choices, you don't have to make these massive changes. Just go for a walk, right? Something my wife and I started, with the lockdowns is that we go for walks every night together. And it's been great, right? We talk, we catch up. She works full time. I work full time. I work a lot. She works a lot. But we just go on a 30, 45-minute walk together. We generally take the dogs with us. Dogs have a good time. They chase ducks. Or try anyway. But we just get caught up, and it's been great for our relationship, right? I mean, it just gives us some time away from the kids, away from everything else, that we just spend time together, and we just have this time together, right? And for us, it's more of just spending time. She works out, I work out independently. We work out every day. That's just kind of our thing. But the walks could also be just get out there and enjoy some time with your significant other, and you'll be surprised at what happens with your relationship too. So there's lots of benefits to this. Eating a little healthier, you feel better, things happen, But more importantly, what this will lead to is better wealth and prosperity down the road. And again, you don't want to spend a lot of that time in and out of hospitals. Okay, enough of that. But I just want, long-term care is one of the big things over the next 20 years. It's going to be a major, major factor as we get into the later stages of the baby boomer generation. That's going to be, long-term care, hospitalizations, medicine, all those type of things. That's why we remain overweight healthcare in our portfolios. Johnson & Johnson, Abbott, these type of companies. We have an overweight holding in those healthcare stocks for that reason. And we'll continue to hold an overweight position in healthcare for a very long period of time. Because again, when we come back and talking about what companies can actually generate earnings growth over time in an economy that's going to grow at a weaker rate than we were even pre-pandemic, I want to own companies that can generate earnings growth. That's healthcare and tech. I mean, that's pretty much going to be your big earnings growers over the course of the next decade. That's not going to change because of what's happening with both the transition in healthcare to being more technology driven, as well as the demand on the healthcare system from an aging group of baby boomers that are reaching that age, right? So, it's again, the best advice though is make better bad choices. Small changes today can lead to big changes tomorrow. And that's really what you want to have down the road is those big changes that work for you. Speaking of dogs, the other morning I get up really, people talk about getting up at the butt crack of dawn. I'm at the foot of dawn. I mean, I'm not even, I get up so early, the moon's still up, everything's going on. But
it's so peaceful.
I know it is. It's very peaceful, and I'll let the dogs out to go to the backyard, and they did their business. They came back in. I hear my younger dog chewing on something, And I'm like, can't figure out what he's chewing on. And I walk over there, and he's got half of a dead rabbit that he's eating.
Oh, yum.
Yeah, skull, rib cage. I don't know where he dug this thing up. We have Cody's that are behind our house, and apparently they had gotten a rabbit. But anyway, he brought it in the house. My wife will not go near anywhere in that corner of the house. It is now the dead zone as far as she's concerned. All right. Anyway, back after the break. Don't go away.
Listening to The Real Investment Show.
Long-term care is the financial elephant in the room. The median national cost of a private room in a nursing home? $8,517 a month. Are your finances prepared to handle that burden? Our next Candid Coffee with Richard Rosso and Danny Ratliff can show you how to protect your finances from the effects of a long-term care event, the myths to ignore, and how to prepare a plan to address the cost. Register for the special long-term care edition of Candid Coffee, Saturday, December 5th at RIAadvisors.com.
Life is a series of events. How long will your retirement last? More importantly, how long will your retirement funds last? You can plan for a successful retirement with RIA Advisors' free financial planning tool, MyBlocks. It's our online modular manager for your money and your life. Does your vision of retirement match up to reality? MyBlocks can help to determine how much you'll need and how to achieve that goal. Create your own personal financial vision for the next decade with MyBlocks, our free tool at RIAadvisors.com. That's RIAadvisors.com.
The Real Investment Show.
Clean shirt, new shoes, and I don't know where I'm
And welcome back to the show this morning. I'm Russ Lance Roberts. So, yesterday, Walmart reported really strong earnings. And Target also crushed estimates this morning on that side. But yeah, if we take a look at actual retail sales, and those came out yesterday, retail sales have been weaker here lately. And that's not surprising. Take a look at a lot of the economic indicators. We're starting to see a stagnation in economic growth. You know, we had this big bounce off, we had this big decline in economic activity when we shut down the economy. When we opened the economy back up, that quickly came back because it was an artificial shutdown of the economy that threw the economy into a recession. So not surprisingly, you have a very sharp rebound on that activity, but that activity is now stalled at a lower level than we were pre-pandemic. And that's going to be the new norm, by the way. We've talked about this before. Coming out of this cycle, we will have a lower trend rate of economic growth than we had previous to the pandemic because of what we've done to the economy. I've got an article coming out on this very shortly. It's amazing. If you go to the website, realinvestmentadvice.com, we always have articles that are coming out about stuff we talk about here on the show. So tons of stuff there for you.
It's uncanny.
It's uncanny how that happens. Anyway, one of the things is, and we've talked about this previously, that coming out of the Great Depression, and I'm not saying we're in a depression, I'm just comparative. But coming out of the Great Depression, people changed habits and behaviors because of what happened to them during the Depression. They said, I don't want to go through that again personally, right? So they changed their savings behavior. They changed the way they, bought things and did things. Coming out of the financial crisis in 2008, people changed behavior. Coming out of COVID, it's a little different, but people are changing behavior. And they're not changing behavior so much because of COVID. I mean, all they are. I mean, right, we're going to be wearing masks more, and, we probably won't do things, at least for a long time, until there's an actual vaccine in place and we're comfortable that we won't get, the virus. So it may be a while before some areas of the economy come back to normalized levels for economic activity, just because of psychological issues. But there's some things that have happened during the shutdown that are going to permanently change behaviors. And we're seeing this with Target, with Walmart, and with Amazon. Article out this morning. So we talked about retail sales route. Yesterday came in weaker than expected. Not surprising considering there's been no stimulus and people are running out of excess cash. Online sales have surged. They're basically at a record high. News story out this morning that it's expected that online sales will make up more than 50% of Christmas retail shopping. Even though the expected amount of expenditures of consumers will be about 7% less than last year. So they're going to spend less, but they're going to spend more online. And this is really, one of those changes that we're looking at in the economy, but it's not just retail sales that are changing behaviors. And this has an impact to companies that you own and stocks you invest in and things that you do. So it's important to kind of understand these trends and what's happening. But, we're changing behavior. People are going, you know what? It's easy to shop online. I order it and it shows up the next morning. I really, this was, if you were alive back in the late 80s, FedEx, we had fax machines back then, right? I said late 80s, sorry, late 70s. We had fax machines back in the late 70s.
We thought those were so cool.
Right, and we actually mailed letters, right? You actually had to write a letter, put it in an envelope, and you'd mail it off to people. And it was okay. If you were doing business, you'd sign a contract, throw it in an envelope, send it off, and you would know that the guy wouldn't get it for 3 or 4 days. No big deal. It was just the time of doing business, right? Then the fax machine came along. All of a sudden, we could fax stuff back and forth. This is awesome. And then there was this Yahoo that came up and said, you know what, I'm going to get a jet. I'm going to deliver stuff overnight. And people poo-pooed this guy, right? He's like people do not need packages delivered overnight. And he got turned down like 4 or 5 times for money. And finally, FedEx was launched.
It was his master's thesis, and he got a C on the master's thesis. On his
master's thesis, he got a C. But FedEx became FedEx, right? And all of a sudden, now we've got a FedEx nonsense. I mean, we FedEx stuff we have no business FedExing just because we think we need it overnight.
Just because we can.
Because we can, right? And now, because of Amazon, we go, why am I going to wait 4 days for something to get shipped to me, right? I'm going to get it from Amazon to get it tomorrow. Right?
Or in 4 hours.
Or in 4 hours, depending on if you've got a local delivery. So the problem is we have now changed behaviors, right? We've changed expectations. Individuals have a need for immediacy. I want immediate everything, right? If I buy a stock today, I expect it to go up today, right? We have an immediacy need of everything. We have totally lost patience with allowing things to work over time. And now we have this stress within our whole system. I mean, we walk around like a knotted ball because we've got to have everything done right now. Everything's, I got to have it, right? And so this is why we drink. And now we can get alcohol delivered to our house the same day as well. So now it's even better that we've got kids home from school. So...
You know what we've lost in all that? And I don't want to derail your thought because it's...
Yeah, because you're going to sense of humor?
No. We've lost our sense of anticipation and the deliciousness of anticipation.
Exactly. I agree with you.
That's something to be relished.
It is.
And I'll tell you more about it later.
Thanks. But now, this is what we're seeing, right? And so one of the behaviors that isn't going to change after we have a pandemic is people aren't going to go, you know what? I think I'm going to go spend 4 hours at the mall, parking in a parking lot, walking around stores and doing that stuff. There will be people that do it. Trust me. There are people that just are born to shop and they're going to go do it. But we have permanently changed the behavior with people now. And we've also changed the work behavior, right? The whole work at home thing. We accelerated that technology so quickly. And normally what takes companies years to adopt, right? We've seen this work at home thing coming for a while. Companies were talking about being a little bit more flexible, giving you some flexible work hours. You can work at home some, and you work at the office some. And, we had the technology to do that. And there was becoming, a little bit more adoptive behavior by companies. But then because of COVID, it happened all at once, right? that adoption of work at home was going to occur regardless, but now it's occurred all at once. And if you take a look at, for instance, office vacancies, right, that's a huge surge in the amount of companies that have vacant office space. And so this is going to be a problem for commercial real estate. We've talked about this on the show before. But that's not going to change. Just because we have a vaccine, some of these behaviors are not going to change. And so if you're investing in a retailer, as an example, you got to really make sure that that retailer has a very big online presence. We can't own everything in the retail space, but we own Walmart and we own Amazon because of that reason, right? Target's a great company. I just can't own them all. But these are the things you got to think about from your investing strategy, and particularly as you're positioning yourself going forward, is you got to start thinking about when we come out of this, who's going to win? And we talked about right now, there's this big rush and rotation, people trying to jump in the small cap bandwagon, right? Well, small caps need economic growth. Mid caps need strong economic growth. We're not going to have strong economic growth coming out of this. There's this idea, I was reading an article yesterday, it's like, oh, we're going to have this, when we get a vaccine, man, people are just going to go crazy spending stuff. No, they're not. They've already done it because we gave them stimulus. We gave them more money than they had before, in which they spent it, so they pull forward a bunch of this consumption. There is no pent-up demand. You need pent-up demand for people for us to say, get a vaccine, everybody goes, woo, I'm out in the world, right? They got to have it. Now, there's going to be some pockets that temporarily, right? People will start flying again. People start going to hotels again. But they need money, right? They got to have a job. And if we're running at right now, we've got a labor force participation rate of 16 to 54-year-olds, drop out all the people over 55, just for example purposes, saying, okay, they're all retired. You only got 50% employment in the number of people that should be employed. That's not going to improve markedly from here. And you're going to have a problem with wage suppression. Companies are going to go, you know what? This work at home thing is great. I don't have to pay you near as much as I'd have to pay you if you drove to the office every day. Use your own car, use your own internet, use your own cell phone, right? I'll give you a little subsidy for that. I'll give you, $50, $80 a month for that. That's cheap for a business versus paying for a phone system within a company, paying for corporate broadband internet, paying for all the office cubicles, the maintenance, the upkeep, the taxes, the CAM, all that other stuff you got to pay as a business owner. All that goes away. Suppresses wages. Productivity. These are all going to be the issues that are coming forward out of this. And so this idea that there's going to be this massive rotation to small caps and mid caps likely is not going to last long because you don't have the economic growth to support it, and you won't have that growth to support it because of what we did with stimulus and QE dragging forward all that consumption. Just something to think about. Get by the website, realinvestmentadvice.com. Our Michael Leibowitz, CFA, he'll be here tomorrow to talk about his article that's out today called "Well, Do You Feel Lucky?" Yeah, I can't miss it. Big picture of Clint Eastwood on the front page of the website. realinvestmentadvice.com. That's realinvestmentadvice.com. Have a great day, and we'll see you tomorrow in the next edition of the Real Investment Show.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for the Real Investment Report now at realinvestmentadvice.com.
It's a rich man's world.